Welcome back, traders. It's Chris here. So I got a new video for you here. 5 stocks you need to be trading during this 2020 recession and bear market. Well, technically not quite a bear market anymore. We've had a bull market off the rally at the bottom, but you want to be trading both sides of the market right now. We're going to get into why you don't just want to be all long stocks, or you don't just want to be all short stocks. The stock market is never homogeneous like that. Some are going to be rising, some are going to be falling. We want to be taking advantage of both. And so we are not buy and hold investors that we just kind of ride these bear markets down and get crushed and then take years to regain our value on that. No, we're trading both sides of the market. And so I'm going to share with you 5 stocks that you want to be trading during this 2020 recession. Before we do, I'd like to get into just a quick recap of what's going in the overall markets right now. So the S&P 500, we've had a pretty strong drop in this here. If we do a price range on this one here from top to bottom, we dropped about 36%. And then from the bottom, we've had a nice little bear market rally of 29%. Now, if you'd watched my video before, is it time to buy stocks, which we will share the link for you in this description of the video. Bear markets never end in V bottoms. They always have retests of the bottoms. They take a while to bottom. They take, it's not just a V-shaped recovery. I know a lot of people want it to be a V-shaped recovery, but we're going to have at least 15% unemployment in the US. That is something that is going to hit the markets as a whole, and that's not being priced in, I think, at this point. We have restaurants that are not coming back online. Some businesses are going to be closing permanently. So I don't buy this bounce here. And with the low volume that we see here, look at the bounce. This is the 3 weeks of the bounce. Declining volume every single week. So instead of it being a broad-based recovery and we're seeing volume steady or increasing, no, we're seeing volume decreasing. That tells me that this bounce is a combination of some exhaustion on the short-term selling. There is some short covering as well. Fed stimulus obviously helped a little bit, but that's not going to solve the overall problem and situation. Fed stimulus is not going to be able to fight off 15% unemployment, and it's not going to be able to fight off the fact that nobody's flying on airlines and nobody's going out to restaurants. So we're still going to have a lot of problems, a lot of jobs, mortgage foreclosures, and all kinds of things like that. A lot of real estate companies, commercial real estate, not collecting rents. Less than 25% of them were able to collect rents in the last month. So when you look at all these things combined, declining volume, all these things here, and the unlikelihood that this market is going to be bottom because no other bear market in history has, I don't think it's time to be getting fully long stocks at this point. And so that doesn't mean that we can't trade this current upswing. That doesn't mean that some stocks, even in a bear market, aren't going to be gaining. There are going to be stocks. Some stocks will outperform others. And so it's super important that we understand which stocks are going to outperform and which ones we want to be trading with. So with the overall context of what's happening, I'm going to make a kind of prediction or a forecast. I think we're going to actually retest these bottoms around 2,200 within the next 1 to 2 months. So I expect in the next couple months, sometime early to midsummer, that we are going to be retesting this bottom and potentially making new lows. I don't think the bottom is in. And if it is in, then we're going to at least make a second attempt to take out these lows or re-tag those lows. The market is going to sell off and try and make its way down there, 24, 23, 2,200. I don't think we've hit the bottom yet. So with that kind of context in play, let's get into what stocks that you should be trading or that I recommend you should be trading right now during this 2020 recession. Brief review. If we go to this article that I wrote in late February, had you actually read this article and paid attention to it and traded it, you'd be making a lot of money right now. You'd have made a lot of money. You've made a lot of profit. Every one of these trade recommendations and stocks, I had pretty much crushed it across the board. And my senior student, Sasha Goglin, which we're going to share his account later, he's up over 30% in the last month and a half. So with that being said, what were some of the things that I said? Sell airlines. Why? Because nobody's going to be flying. We don't know how long it's going to be. And so that's a big problem. We've seen that airlines have been under pressure, obviously to end February. But when we look at the charts again, let's look at Delta Airlines here. This is the first stock I recommend trading. I think Delta is in trouble right now. So unlike the stock market, which is bouncing off the lows, Delta is actually hugging the lows. And keep in mind, even though it's down 68%, it had dropped over 82% in the 2008 financial crisis. Airlines often get hit in financial crises because flying is oftentimes an extra expense that's not necessarily necessary. I think Delta's under pressure. We're also seeing volume increase as we hug the lows here. So when I look at this here, and we can even look at a daily chart on this one here, it's just not being able to bounce well. It bounces, it hits a 20 MA, it gets rejected. Bulls are trying to make a comeback, but they're just not lifting off the bottom. That tells us there's very little interest. On top of that, Warren Buffett sold millions of his shares. And even though there was kind of a statement saying, oh, I wanted to be below the 10% threshold so I don't have to do reporting, I don't buy that. Warren Buffett sold a lot of shares. bringing well below the 10% stake at this point here. So, you know, if he really was worried about that, he would have gone right up to the border of that, but he sold more than that. What does he see coming? Well, Delta Airlines is losing $60 million a day. So even if they were to get billions in a bailout, how long is that going to last? There's, you know, in terms of traffic revenue, in terms of actual flying revenue, passenger volume is down 94%. And so that is, you know, not a company that is going to rebound anytime soon. As long as we have the shelter in place, air traffic is going to be a problem. And think about it like this. The U.S. is not a monolith in terms of recovery. It's not like we're all, you know, the cases are declining everywhere. Some states are going down. Some states and pockets are going up. And so you're going to see pockets rise and fall, possibly reinfect. So I'm expecting airlines to be under pressure for quite a long time period. I'm looking to actually add more to my short position on a Delta. I am watching for a break, but I will watch for a pullback to sell more short on Delta. So I think one stock you should be trading right now is Delta, and I think you should be on the short side. Also, American Airlines kind of showing a similar pattern, unable to lift off the bottom. And so, you know, it's just, there's just not enough, you know, this pullback is decent, but look, this is a weaker angle. And so you can kind of see the angle here. Look at the angle of the pullback here, and then look at the angle of the pullback here. When angles of bounces get weaker over time, from an order flow perspective, what that means is the buyers are coming in with less volume and less force. And so because they're coming with less force, you see a weaker angle on the pullback. That is communicating through the price action what's going on in the order flow. And that tells me that the bulls, if there are any there in this price here, you know, in the low $10, that they are losing ground continuously. So I think this is something that's going to break lower, and I think it's going to find much lower prices. So again, I like being short airlines right now, particularly American Airlines and Delta. In terms of a company that I like being also short right now, what did I mention in there? On top of this, sell hotels and entertainment. That would have profited a lot for you. It would have totally banked you a lot of profits and money. Well, who's an entertainment company? AMC, movie theaters. Is anybody going to movie theaters? No. Is anybody planning on going to a movie theater, potentially get infected just so they can see their latest movie? No. Everybody's using Netflix right now. So this is an obvious short. They're going to be under a lot of pressure right now. They've even cut their dividend as well. So when you look at this, you're kind of seeing a similar formation. You have a nice support level here at about $2. You get a bounce, you get a weaker bounce, doesn't make it as high, weaker angle, and now we're retesting the bottom here. So I think this is going to continue to find weak bounces, and then I think it's going to break below $2, and I think it's going to probably head towards $1. So I think there's a really good potential short play on AMC on this one here. So again, as I told you in this article, sell airlines and sell entertainment. Not only would have made you a lot of money, but I think that's still the play going forward. Now, in terms of who I'm looking to buy at this point, first off, I kind of want to show you a little graph here. Generally, stocks that you want to buy in bear markets will recover faster. There's a certain type of stocks that tends to recover faster and gain faster from bear markets than others. A lot of people will say, hey, trust your blue chips, trust the companies that have been here, that are stalwarts, that have been around for a while. But those stocks tend to underperform greatly to another set of stocks. And here it is. Stocks that tend to outperform when we look at recessions over the last 60 years, small stocks. As you can see, large stocks generally after 1 month and recessions and bear markets, the ones that do gain, on average, they gain about 2.2%. Small stocks, 3.8%. After 8 months, because the effects of bear markets and recessions are not just one-off things, they don't just V-bottom, they're ongoing, they take months and months to play themselves out. Well, large stocks tend to, the ones that gain, on average, 11.2%, yet small stocks almost double that. And then the advantages just keep growing as time goes on. So for the next few months to few years, I'm actually allocating a lot more of my stock portfolio to smaller stocks than I am big stocks. I know it sounds counterintuitive from a logical perspective. Hey, you know, these stalwarts have been here through bear markets before. Smaller companies are less likely to make it through. Yes, that's true. But you can manage your risk. You can have stop losses on this one here to control your risk. No problem on that. You limit your downside, and you can take advantage of the massive upside that smaller stocks tend to give you versus larger stocks after recession. So that's a few I'm looking at here. Now, here's a couple from my stock portfolio and fund. ISD, it's a high yield bond fund. I have an option call on MINERVA, MINERVA Neurosciences, and ADMA Biologics. Let's go over a couple of these here. Okay, so this is the PGM high yield bond fund. They generally go for higher yields. They're in a combination of derivatives, securities, fixed income, and they're also in some EM. Now, I think the EM portion or emerging market portion of their portfolio, I think is going to struggle. I think EM markets are about to now kind of take this second brunt of effects from this coronavirus. We're now seeing pockets blow up in India, Indonesia, which has kind of been this quiet link. What's happened in Indonesia, highly densely populated country. Now we're starting to see reporting come in and infections climbing. South Korea getting reinfected. We're starting to see a lot of things in Asia and in emerging markets as a whole starting to take a hit. And so with that being said, I think that part of the portfolio is going to struggle, but I think the rest of their bonds are going to hold. So this is a great bond yield fund. One thing I like about it, I'm long just around 1104. And historically, it hasn't been this low, and it's bouncing like the overall market. Contrast that to Delta, which is hugging the lows. So if this is going to recover, if one of these two is going to recover, this one's more likely to recover than Delta. So besides the pricing on this one here, I don't have a large stop on this one. I don't need it. There's a massive dividend on this one here. It's over 10%. So for every 1,000 shares that you buy on this here, you're going to end up making a lot over a 3 to 5 year horizon on this one here. Assuming the bond yield fund doesn't blow up, it's been around for quite a long time. I don't think it's going to blow up anytime soon. So I think as long as it can maintain the current gains or recapture some of its gains over time, then I think you're going to make a lot on this one here. So regardless of whether its EM portfolio may struggle, I think the rest of its portfolio is balanced, and I think it's good. It offers a massive dividend, over 10% right now. So think about the dividend yield you can gain on that over a year, over 1,000 plus shares. That's a lot of money you can capture in this over time. So I feel pretty solid about this one here. I'm in at about 1104, so I'm up a little bit right now. 1,000 shares, it's only about $1,000, $1,100, $1,200, whatever, nothing special. But the dividend capture on this one is going to be fantastic. Over a 1 to 3 to 5 year horizon, I like to play this one out. So even if it kind of hits the new lows, if we bottom out at the lows again and then the market bounces again, I put very little risk on my downside here, and I have a lot of upside, and a lot of the downside can be mitigated with the high dividend. I never buy a stock just for a dividend only. It has to have a good technical reason. It has to have a good fundamental reason for me to do it if I want to hold it long term. I think there's a lot of things in play with this one here that I think are going to hold its value over time and also get the second income on the dividend here. So this is one that I'm trading right now. Also MINERVA Sciences. I actually like the bottom on this one here. It's at a consistent bottom that's held here between the low 4s and the high 4s. So I'm at about long at about 475. I like this one a lot. The one thing that really actually kind of stood out for me on this one was the option trading. There's a lot of option contracts on this one here. A lot of calls for 10, 12, a lot of higher prices. There's just significant volume on that one there. So what is it the option market knows that the stock market doesn't? It seems like that there's considering a hugely disproportionate amount of calls on this one here, that some large players are speculating that MINERVA Neurosciences is going to hold its value and gain significantly, at least into the double digits. And so with a great technical reason of, super awesome support level that's held consistently provided bounces up to the $9 all the way even up to the 15, and it's held every single time. I like it from a technical perspective. I like it from the option flow perspective. To me, this one makes sense. So this is the 5th stock that I'm watching right now. These are 5 stocks that you can be trading right now that I think offer great opportunities. If you notice, again, I'm not just looking to be long, I'm also looking to be short. You have to in bear markets. As I said in my prior video, is the stock market going to bottom? We analyzed all the bear markets over the last 40 years. Bottoms take time. There are no V bottoms. They often take days, weeks, months, many, many months. The fastest bear market in history is 3 months. The fastest recovery time is 4 months. So we got time for the market to bottom and to find good prices at the bottom. We already have the bottom in place, there's no need to rush it because it's going to take time. The market's going to come close to retesting it. Your job isn't to pick the bottom in the stock market. Your job is to get somewhere along the timing right in the bottom in the relative price range so that you can profit from the next bull market cycle that happens. So with that being said, I hope you enjoyed this video. I hope you found it informative. I hope you learned a few things about it and how you can profit from this. We have a lot of traders that are making money. Sasha Gogolin, as we shared on our YouTube channel, he's up over 30% on the year. We have another student, Nabil, is up over 89%. I have another student that's made over $150,000 in the last month alone. our students are making money because we teach them how to make money in bull and bear markets, how to trade both sides of the market, and how to find premium opportunities. So if you'd like to learn more about that, check us out at secondskiesforex.com. Also, make sure to smash that like button there and subscribe to our channel. It helps YouTube with the algorithm recognize us as a good channel, that you like our content. And when you like our content, then we can keep doing more free content like this. It's just a win-win. Everybody wins on this here. We get to do more content, help you make more money, better trades, and we get to do free videos like this in the future. So I look forward to hearing from you. Make sure to comment below, and I'll see you in the next video.